Hi everyone, I'm Saloni and today we have with us Mr. Ankit Kedia, founder of CapitalA. Hi Ankit, welcome to Social Bits. How are you doing today?
I'm doing well, Saloni. Thank you for having me here.
Okay, so let's start with an introduction about yourself and your background in the investment industry.
My background is out and out a thoroughbred Bangalorean. Grew up here, went to school here, did my schooling in Bishop Cotton, then went to Christ College, then did my undergrad in Michigan, came back, worked there for a bit in the US, came back and went to SPJN for my postgrad. And in 2006, I joined our family business, which manufactures rigid plastic packaging, a company called Manjushri Technopack Limited, and worked there along with the family. Started as a trainee on the shop floor, worked my way up. Didn't get any fancy cabins or rooms or anything like that. So that was my training. Although I'm a business graduate, most of my engineering I learned on the shop floor and did that until 2018. Built a family business along with the other family members. Did some landmark developments in the packaging industry, including uh, manufacturing of LED bulbs for the Ujala scheme of the government of India. So that was extremely fulfilling. 2018 is when we divested the company or sold the company to a private equity fund and dabbled in a couple of things for the next couple of years. In early 2021, started CapitalA, which is a $25 million fund, about 200 odd crores. And idea was to invest in early stage startups in the climate tech space, in new age economy, creator economy, in fintech, and anything to do with enterprise businesses.
So, what motivated you to pursue a career in investing? What motivated Capital E?
As a second generation entrepreneur in our family business, there comes a time when we realize that not everything can be done by ourselves. And that's when you get external investors. And external investors can actually help you add a lot of value, get a lot of connections, and overall help you grow the business inorganically. We largely benefited from that investment with a private equity fund. And I thought, given my so many years of experience of operating, I think probably I'll be able to do the same with the kind of investments that I do. Given that many companies, many startup founders have great ideas, great uh, businesses that they want to build, great technology. I think sometimes the fundamentals of business become slightly blurry, and that's when experience of operators like us come into play. And that was the motivation, that get your hands dirty, roll up your sleeves, work with the founders, and create an impact for the founders as well as for the founders' audience, which became a very strong drive for me to start CapitalA.
Okay, so, what specific areas or sectors do you focus on while investing?
Saloni, it's a question which all investors get asked, and they also get asked for reasons why they chose those sectors, right?
Mhm.
Um, at the beginning of our journey, when we said that, look, we will be sector agnostic, it became slightly overwhelming because in investment there is a lot of context switching to be done. Today you are looking at a consumer business, tomorrow you're looking at a B2B business, next day you're looking at something in climate or something in fintech.
Mhm.
uh, it can become extremely overwhelming. And what we then early on decided is we'll pick a few sectors, a which is already uh, proven, and it continues to have a lot of interest from the startup founders. And the second sector we will pick, which is visionary or progressive in nature and probably is in its early days right now. So we started with our investment in the climate tech space, where in climate, there are a lot of sectors. You have energy, you have EV, mobility, manufacturing, Industry 4.0,
Mm-hmm.
so many other things. So we started off as investing in subsectors of EV and mobility. We then graduated to sustainable packaging, uh,
Yeah.
also in different forms of cooling solutions, logistics that had a climate angle, then obviously auto parts for EV. So those are some of the things that we are focusing on right now. We are uh, building our thesis on how we can reduce carbon footprints using technology. How can we report carbon and templates to reduce carbon footprints. A lot of startups are building around that space. Similarly, fintech is a very strong area of interest, especially on the wealth tech side, on the lending side. In lending, also, there are many categories. You have lending to B2B businesses, then
Mm-hmm.
it's consumer lending, then there is lending to the blue collared segment. So that's on the fintech side. And then obviously anything opportunistically, we feel that great founders, and if they are building business to business startups or B2B startups, that's where our main interest lies. We s- we stay away from D2C and crypto or ancillary sectors, because that's where we feel we probably will not be able to add too much value to the founders.
Okay, so what criteria do you typically look for while evaluating potential investment opportunities?
Uh, it's early stage investing, so it's pointless to go over Excel sheets or do too much analysis paralysis on the data provided by the founders. What we typically look for is whether there is a large addressable market, or TAM, the total addressable market, is it large enough for the founder to execute? And if there is already competition, then why this particular founder is the best person to execute? So, number one, addressable market. Number two, we pay a lot of attention to how the founding team is. For example, we have learned that a single founder company is statistically also very difficult to build, because a startup is a journey where you come across different situations, different type of challenges. It's just good to have a co-pilot on board. So the founding team uh, hustle, the founding team's past, and everything else. That's another factor that we consider while investing. And third, obviously, is uh, you know uh, whether it is whether it's a 5 year horizon or a 10 year horizon, what's in for us in terms of the returns for our LPs, because we do have a responsibility towards our LPs as well. So that's another thing that we look after
Okay.
before investing.
Okay. So can you share any notable success stories or investments that you have been involved in?
Sure. One of the very early bets that we made in a company called ChargeUp, which is a battery swapping company. It's for e-rickshaw in NCR area, where they've built a model to swap batteries with the old one and then replacing it with a charged battery. We invested a couple of years ago, and the company has done really well. They have since raised two rounds of funding from investors. Their revenues have significantly grown, almost 8x of revenue what they started. They've gone into new geographies. So, absolutely excited about that investment. Another one on the fintech side is a company called Credit Fair, which is a BNPL platform where they, lend. It's a BNPL checkout platform for different domains like solar, for education, for home decor, things, right? Strong underwriting metrics, very strong. Really, again, breaking some records every month. And then, of course, there are some newer investments which we've just done. For example, in a company called Tan90, which is into advanced schooling solutions. That's one investment that we are very excited about. Obviously, our entire portfolio that we've done it with full conviction, and we hope that will do well. But yeah, these are the few ones amongst the other success stories that I thought I could talk about.
Okay, so what are some common challenges you face as an investor?
That's a $1 billion question. Challenges, I think one of the biggest challenges that we face as investors is investing the capital is uh, that decision is one part of it. After you make that investment, on how to make that investment successful, the journey from transferring the money to the exit, I think that is something which is a very interesting journey. And the challenge over there is to make sure that your vision and the founder's vision is absolutely aligned. Your goals are common. And, and in that journey, to make sure that you also make a return both for the founders as well as for yourself. Another challenge in the investing space is because there are so many deals that keep coming your way. One
Mhm.
has to be really careful to select which one to invest in, and it becomes extremely overwhelming to respond to each one of them and to select the right one. Sometimes you select the right ones and you still don't end up making your returns, and there are the ones which you sometimes miss. But that's the business as usual for this industry.
Okay. So, do you have any preferred investment style or philosophy that guides your decision-making process?
Our investment style is usually very hands-on. When we are investing or when we are discussing with the founders, we, typically ask them what do they expect from us. If it's just uh, uh, passively investing and giving our capital, we usually try and avoid such investments because we like to be active board members, operationally involved along with the founders, even if it means that we don't have a very high percentage of stake in the business. But at the same time, we try to make sure that we are able to unlock value for the founders and get them the right engagement and network to uh, progress in their journeys. So that's one style. The other thing is we also know where to draw the line. The founders are usually the best people to figure out their business. The smartest of founders don't need to be told what is to be done.
Mm-hmm.
So while we get involved operationally, we also know where to draw the line and say that, look, the founders will figure this out for themselves.
Okay. So, what does your experience say about being a passionate angel investor?
Well, like I said, CapitalA as a fund has a different thesis. We invest up to $500,000 into climate and fintech and enterprise businesses. And whatever doesn't fall in this category, I usually try and invest in my personal capacity, which then means investing in sectors which do not fall under this thesis or are very early stage.
Okay.
But my experience as an angel investor is that you have to seriously consider this as an asset class. It cannot be, you cannot just invest in one or two companies and expect them to do well.
Hmm.
You have to create a pool of money that you are uh, ready to lose in case some of these don't work out. So you have to create a portfolio. Your deal sourcing has to be good. Your networking has to be good. You have to keep talking to founders. You have to figure out what they do well, what they don't. And at
Mm-hmm.
the end of the day, you have to make some mistakes in order to learn how to invest. I mean, you have to invest to learn before you learn to invest.
Okay. So, how do you manage risks and rewards as well?
At CapitalA, we take our governance very seriously. And obviously, with so many news that you are reading these days of uh, governance issues and
Hmm.
a lot of audits going on, I think the fundamental idea is to establish a trust with the founders.
Okay.
Once that is done, uh, then things become a lot more easier. Uh, Given that it is a financial transaction and there has to be some amount of checks and balances, we also uh, do quarterly audits or internal audits just to make sure the paperwork is in place. Sometimes founders don't intentionally do anything, but it's just that there is so many things going on. Sometimes they miss it, and as investors, it becomes our responsibility also to make sure that their paperwork as well as our paperwork is in place so that we are following the law of the land. So, in a way, the risk of capital always exists as long as you are responsible with it, as long as you are transparent with your founders, as long as you're able to manage the burn and the transparency and trust with the founders exists. I think there is some way to mitigate the risk a little bit.
So, are there any particular industries or sectors that you find particularly promising or exciting for future investment opportunities?
Of course, we find that there are so many unaddressed areas in the space of climate. For example, the entire energy management uh, is completely unaddressed right now. There is so much to be done in the entire EV battery chemistry. We
Mm-hmm.
find that there is so much excitement whenever there is some new lithium reserve found, whether it is in Kashmir or whether it's in Rajasthan. But then the infrastructure for that is still not ready, and it'll take time. So we have to start doing something about it right now for the processing of lithium, for battery recycling. I think those are some of the areas which remain largely unaddressed. There are a lot of there is a lot of noise around the entire carbon tracing business where they are trying to measure carbon footprints and then trying to become ESG compliant. But that subject is extremely, uncertain right now, and there are a lot of interesting startups building around that space. Uh, One needs to be really clear on whether it's an investable space or not. So
Mm-hmm.
that's something we are very excited about. Solar financing, water management, how to digitize water supplies, how to reduce energy consumption, what are some of the smart ways to integrate industry 4.0, 5.0 through both hardware and software to uh,
Mm-hmm.
you know make sure that we are working towards the climate, and then uh, you know cross-border payments in the fintech side. Those are some of the things that we're extremely excited with.
Okay, so what advice would you give to aspiring investors who are looking to enter the field?
Investing is a full-time activity. Uh, you can't just say that, look, I want to be an investor and I want to do something else. Yes, you can be an angel investor on the side and still have a full-time business doing something else. At the same time, like I said, it's a full-blown asset class. Uh, it's responsible investing. You're backing founders.
Mm-hmm.
Uh, I think it's good to structure the pool of capital that you want to allocate towards investing in startups.
Okay.
So for aspiring investors, I would say, be active, follow the news, follow what the startup action is happening, and just start investing, because many people go into this entire mode of analyzing too much, which then delays the entire process. Once they've decided that this is the pool of money that I want to invest, it's good to make a start somewhere, start learning, start attending pitch calls, start attending events, and eventually you will end up learning about the space more practically than anything else.
Okay. So, till now, in how many startups have you invested?
We've deployed close to about $5.5 million in 25 startups,
Oh,
uh, of which right now, if some of these are in my angel capacity, if you remove those, we've done close to about 15 investments. And idea is to do 10 more investments and complete the first check deployment by the end of 2025.
so as a founder of Capital A, what did you learn?
I think one of the biggest learnings that I have is people. There is enormous capability in people, in entrepreneurs of our ecosystem.
Mm-hmm.
Uh, there is enormous capital available in the ecosystem. I think it just needs a bit of there's a potential for matchmaking that exists in the market that needs to be done. Sometimes the deserving entrepreneurs do not get the right capital, and that's what we are trying to solve through CapitalA.
Okay.
The other thing is, in other businesses, everything is tangible. If you're manufacturing something, you put the raw material and you get the output. You can see it, you can touch it and feel it. Over
Mm-hmm.
here, when you are investing in human beings, you are investing in their belief of their business, which sometimes can be a very different type of a decision, and it can be extremely fulfilling. So to see your founders do well, to see your founders having making an impact, can be extremely satisfying. Those are some of the things that I've learned in Capital A. Obviously, every day is a new day. We keep learning from our founders. We're extremely fortunate to have an amazing pool of founders who are very receptive of our feedback, who are extremely also enthusiastic about teaching a thing or two about their space. So more than us more than us guiding or mentoring them, we usually end up learning from them about their domains.
Okay, so that's all for today. Thank you so much for sharing so many valuable insights with us and joining us for this conversation. Thank you.
Thank you, Saloni. Thank you for having me.